What's up you guys, and welcome to the Crude Crypto YouTube channel. And in this video I'm going to look at the Pi cycle top indicator, which has just flashed a signal which indicates a cycle top. So if you're already excited, please leave a like and subscribe, because on a really small channel these actions have a major impact on me, so please do. Historically, when the yellow moving average crosses over the green moving average, this indicates a market cycle top. We can see that in 2013, this indicator showed this signal twice. We can see that here and here. And after the signal was shown, we saw a 80% correction, which was also confluent with a cycle peak. However, in 2013, we saw a double peak cycle, and therefore this indicator showed a major peak twice, and only one cycle peak. So historically, this indicator has predicted a 80% correction after this signal was shown. Well, that's not completely true, because the Pi cycle top indicator was created after 2018, and therefore it hasn't proven itself to be predictive. Because of this, we cannot solely conclude that we have a cycle top solely on this indicator. We have to complement or disprove this signal with multiple indicators and data science models. So let's dive straight in. For the first data science model, I'd like to look at the Pull multiple. I've gone over this model in a previous video, so watch that one for a more broad and deeper explanation of the indicator. In this picture we can see that the Pull multiple has predicted the last 4 major tops when the Pull multiple value, this red line, has entered this red zone. Currently, as you can see, we aren't in this red zone, this overextended zone. And therefore we have, according to the Pull multiple, a bit more room to grow. If this Pull multiple value trend continues, we would see a cycle top when the Pull multiple is around this value. And therefore the Pull multiple is not indicating a cycle top right now. For the second data science model indicator, we are looking at the 200-week moving average heat map. And this indicator is simply a percentage increase of the 200 weekly moving average. Here we can see that in the previous cycles, the 200-week moving average percentage-wise increased so much, the signal flashed red, which is around 14 to 16% overextension of the 200 weekly moving average. I do believe that we will see less volatility over time, and therefore I do not think that we would necessarily have to see the 16 or 14% before this could indicate a top. But I would be really cautious when we would see a yellow or orange color, which we currently are not seeing. Therefore, this indicator also shows that we have a bit more room to grow, and this is not the cycle top. Similarly to the Pull multiple, the MVRV Z-score also showed the previous major peaks when the MVRV Z-score entered this red zone. Again, currently the MVRV Z-score isn't above 8, and therefore this indicator also suggests that we have more room to grow. For the 1-year hodl wave, which shows the amount of Bitcoin which hasn't moved for 1 year or more, we can see that in bull markets this percentage declines when old hands are selling their Bitcoin to new people, and finds a bottom at the cycle peak. In the previous cycle, this bottom was around 40%, and in the cycle before that, this was also around 40%. Currently, 56% of the total Bitcoin supply hasn't moved in 1 year or more. And therefore, also according to this metric, the Bitcoin price can go much higher before we would see a market cycle top. The R-HODL ratio is a ratio of the short-term holders compared to the long-year holders times the total market age. This model also showed the previous major market peaks when the R-HODL ratio value got above around 50,000. Currently the R-HODL ratio is around 10,000. And therefore we haven't really seen the large amount of profit taking we usually see at the end of a bull market. Therefore people are still really confident that price will go higher and are not ready to sell their Bitcoin yet. They are waiting for a higher price, and therefore the buying pressure will outweigh the selling pressure in the long term and push price higher. The reserve risk is Bitcoin market price divided by the HODL bank, And currently this reserve risk value is building up and is reaching high levels. However, also in this indicator, we aren't seeing these high overextended reserve risk values, which indicate a cycle top. And therefore, again, also this model suggests that we are not at a market cycle top. For the Bitcoin log growth curves, we are also seeing a similar story. Below this chart, we are seeing a red value. This value is the ratio between the most extreme yellow lines, between the bottom yellow line and the upper yellow line. This red value again is also building up, showing that we are reaching an overextended period. However, very similar to the previous models, we aren't seeing these extreme overextended values, which indicate a market top. However, we are seeing that the ratio we are seeing here is very similar to the ratio we are seeing in 2013 with the double peak top. So therefore, corrections are always possible, but this would not indicate a true market cycle top. If we also take a look at the Bitcoin reserve balance on the exchanges, on the crypto exchanges, we can see that this amount is depleting over time. This shows that people are buying Bitcoin and sending that to their cold wallets, which is mostly used for long-term holding. If we instead would see the Bitcoin exchange balance increase over time, this would mean that people are willing to sell or are anticipating to sell their Bitcoin because otherwise you wouldn't send it to an exchange. Therefore, it's really bullish that we are still seeing this amount decrease over time, which is a really bullish indicator. Next, I'd like to look at the SOPR, the spend output profit ratio, which indicates the overall market's profitability. When this value reaches below 1, people are overall selling at a loss, and people overall don't want to do that. We can see that when the SOPR ratio values are high, the chance of a correction increases. With high SOPR ratio value, the size of the correction gets larger, because the price can go down much lower before people are at a loss, and therefore they would stop selling. Currently, we are seeing that the SOPR ratio is almost at a reset, which is a really bullish indicator that people are not really willing to sell their Bitcoin at these prices. So this again is also a bullish indicator. We also have to acknowledge that in this cycle, institutions are buying Bitcoin. As we can see at bitcointreasuries.org, we can see all companies which have bought Bitcoin and are holding Bitcoin on their balance sheet. This list is increasing over time, which is really bullish to see that there's more institutional adoption and interest growing over time. We can also see that currently 6.75% of all Bitcoins are in the hands of institutional investors. These investors are less speculating with price and are using Bitcoin more as a store of value. Therefore, they are converting their cash balance sheet into Bitcoin to protect it from inflation. Because of this, the selling pressure of this cycle could be a bit lower than the previous cycles. This, however, has to be proven. At last, I'd like to look at price. Generally, we see the volatility and the volume increase when the Bitcoin price is reaching a market peak or a major peak. We can see that in 2013 that both volume and price increases over time. We can see that twice for the double peak. We can see it in 2017 that when price is increasing and volume is increasing, also volatility is increasing. However, if we take a look at the current price action, we can see that when price does increase, but volume is declining over time. And these are not conditions for a market cycle peak. Therefore, the current price action is more similar with a consolidation phase than with a true market cycle peak. If we zoom into the 4-hour time frame, we can see that we are developing higher lows, developing this trend, and we are somewhat finding resistance around the 58 to 64K range. And therefore this range is a resistance range. which is a really broad one. Looking at it very simplistically, we can see that this is forming an ascending triangle pattern, which is a bullish continuation pattern. This pattern mainly plays out bullishly if the market is bullish and price bullishly reached this pattern. If I needed to guess which way we would break out, I would guess to the upside. Since we are still seeing the exchange balances decrease over time, which shows that people are not really interested in selling right now and are waiting for higher prices, and that the spend output profit ratio has also almost already been reset, reducing the selling pressure and also the willingness to sell. Combine this with a bullish pattern and the right bullish conditions, I would say that it's more likely that we would break out of this pattern to the upside than to the downside. We are already somewhat seeing signs of a breakout. However, we need more volume to confirm this breakout. We are already seeing that the price has been backtesting the previous top, which is a really bullish sign that we are finding support on a previous resistance and making it new support. We also do need to break this MACD line. If we don't break this MACD line, this would form bearish divergence for the third time, which is a bearish indication. Therefore, presumably we aren't currently breaking out and we would find support one more time before breaking out. Always be prepared for corrections. These can always occur, even in the bull market. To summarize this video, we've concluded that we currently are not at a cycle peak. However, the models are approaching the overextended areas, which can reach these areas when price increases. Therefore, subscribe now if you want to receive updates on these models and be prepared for when the next market peak is formed. Well, I hope you guys enjoyed this video. If you have any suggestions which I should do with these videos, please leave a comment. And also subscribe and like if you enjoyed the video. Because I'm a really small channel, these actions have a major impact on me, so please do. And I'll catch you in the next one.